JB here. Hope everyone's doing that Sunday, Thursday, March 6th, 3:15. Talk quick about the market. Some names I'm looking at go from there. S&P was down 2%. We're bouncing here, but another rough session here. Not much in the way of catalyst, just more around the tariffs. We had the weekly jobless claims this morning actually came in better than expected. And it just seems like it's like continuation. So we'll see. I was mentioning it before. It almost feels like we can be down 3% from here, or up 3 or more than it, up 5% or down 5%. I wouldn't be surprised. Market's been trying to bounce. We back when I was doing the audio back in the late winter, so December, we had those swings of like 0.3% for the entire day. And now we're getting swings of 0.3% in a matter of 10 minutes. And it seems like every time the S&P or the SPY starts to drop, and we were 570, then it bounces and it goes from 570 to 573 in about 5 minutes. Then we dip, then it bounces again, another $3 bounce. Earlier, just before, we got a 570 tap at about 2:30, and then within about 15 minutes, we're at 575. So, it's tough. I keep saying this over and over, but small can become big in this environment if we get moves, right? But also big can become very small. So I continue kind of remain keeping things small and then holding things, right? Goldman Spectacular is a great example. The puts into the close yesterday, said I'm going to hold them as a put hedge, and they were I wouldn't say decimated, but substantially lower, and boom, they're back to life. So that's kind of what's going on now. Same with the call side. Take a look at Caterpillar. I got the cat spec calls on the bounce yesterday. Caterpillar was a little weak in the morning, and the calls are back in the green. So what happens with these swings, the implied volatility increases, and calls and puts start to go up in price, which is good and bad, right? It's good if you're in the position, because then it's going to go up just because of the volatility in the market. And the bad is, if you want to get in a position, the volatility is elevated, so there's higher risk involved, right? And then if you do get the move, you're not going to make as much money. So that's kind of where we're in. I'll continue to keep things small until I get some conviction. I would love to be bullish here, get my bullhorns on, and think that we're going to rally. It just feels like uncertainty, right? And uncertainty is not good, regardless of what goes on. Now, we had news today that the U.S. is going to honor items on the USMCA, right? The United States, Mexico, Canada trade agreement, which I guess replaced the North American trade agreement back in the day. And even with that, you didn't get much of a move. And then we were open to negotiate. Oh, oh gosh. And then it didn't really move much. Yesterday, the tariff news on autos moved the markets more. So also today, you had the GDP now number come out from the Atlanta Fed, and that came out at I think it was 2.4% versus that 2.8% estimate from last read. So the next one won't be on until St. Patrick's Day, March 17th. So we'll kind of have to sit on our hands for that. But again, I think this just goes to uncertainty, right? Who knows how this, nobody knows. You can't say you can't say 100% guarantee that the tariffs could be 100% negative for markets, or who knows that there might be some positives to it. And with anything, it doesn't matter whether you agree or disagree. Change is nobody likes change, right? Most times people, you don't like your cereal change. You don't want, you don't like to change your routine. It's tough to get to change. That's just how life is, right? No, people don't like change. Just how it is. So we'll see how this all plays out. I have this little chart here, and I've been posting it, like the 30-minute chart here this week. And to think we're at 596 on the SPY, uh, we hit the 200-day moving average on the Nasdaq was breached earlier. The S&P was tested before, so certainly some key supports. Hopefully, again, the market can find some footing. It's funny that earnings have been good, right? You could take even with the retail earnings, Walmart earnings were good, Target earnings were good, but the outlook was kind of just a little weaker than expected. Some concerns with the tariffs and stuff, but I mean, it's the guidance for these companies, it's based on trends, right? They don't know 100% what the guide what it's going to look like. So we'll see how this all plays out. So I remain cautious. 560, I think it's 569 on the SPY. That'd be a big spot. Want to see the 200-day moving average hold on that. And then 563 down from the October lows. We breached that, then maybe I get my bear suit on for a little bit. But if you've trade in an environment like this in the past. Pinto was just mentioned before when I said that we could be up down or down 3% or 5%. I mean, you have it's like a memory that of 2008, even into the COVID times, where we have these massive plunge protection team squeezes at the end of the day, and a lot of people who trade now aren't used to haven't seen things like stocks go from the S&P down 4% to up 3% in a matter of 30 minutes. And then you wonder what happened. We used to call it the magical hand, the PPT, right? If you haven't been around the plunge protection team, go look back 2008, 2009, some crazy mysterious moves in the market where someone hits a button. You don't know who it is, but they hit a button, and it's all of a sudden you think the world was ending, and then the papers the next day will say, "Oh, markets rallied 2%," and people who don't trade the market don't realize the reversal. So, all right, so that's overall markets. I remain cautiously just cautious, right? I don't even know if I'm optimistic. I'm open to both sides of the fence here. And then tomorrow's jobs report might point a little bit of direction. It's gonna be a doozy. But then again, the ADP number this morning showed less folks doing claims. Then you had the Challenger report came out of the worst since 2020. All right, so that's overall markets. So individual names, and again, speaking to kind of how difficult it is to hold puts. JP Morgan is off. I don't even want to look what it is this week. But I got those puts on Monday to 245s, kind of like a hedge. And I close them on Monday, Tuesday for 400%, whatever, 700%. And those puts are not even. So JP Morgan's down 7% this week. And I sold those puts on Tuesday, and JP Morgan is lower than where it was on Tuesday, and those puts are less than when I closed them out. So you could have had the right idea. You could have said, "Hey, JP Morgan is going to continue to sell off, hold the puts, and be red on that position," right? So that's that's why it's tough to hold puts. But if we have follow through tomorrow, so anyway, I don't know why I have JP Morgan up here. So today, just similar to what I did on Friday, it's not a name I've traded much, and I'm a big believer in crypto. I think if you look down the line in the future, I got years from now, and intraday, intra-month, intra-week, I think there's opportunities on both sides. So I continue to look for opportunities on strategy. The premiums were elevated earlier, but they have the crypto summits tomorrow. A lot of folks go into that. I don't know what could come out of it. We saw what happened on Sunday with the futures after they announced the crypto reserve, and then the crypto summit, which happened tomorrow. It's almost to me like it would be like a sell the news event. So got those puts. I'll continue to hold those. I might look for other opportunities tomorrow. MicroStrategy might be $700 in a year. For now, I'm just trading the short-term trend. And then Goldman Spectacular. So I mentioned that earlier. Why don't I have it up? I thought I had those charts up here. But all the way up to 593 yesterday. Then, held those puts, and here it is down at lows, 566. I could see it trading down to 540 tomorrow if there's continued weakness. So as much as I want to close out, and I think they were in the green before, as much as I was looking, because they took it on the chin yesterday. So if you look and you got the calls today, you're up 240%. I mean, the puts on the 540 puts, you're up 240%, but I'm back to even. So I'll just continue to hold those as a hedge. That's JP Morgan. On the flip side, Caterpillar, which had a spike earlier, it has relative strength. So even when the market was kind of weak earlier, it went all the way up to almost 342. I don't know if that's a sign that maybe the bottom's in, but I'll continue to hold those 350s as a flip side hedge, right? If we have some strength tomorrow, can't rule that out. Other names. So Ralph Lauren, I keep looking for puts to play. It's down another 4.5% today. It's like I'm kicking myself. It's like a deer in headlights, trying to get the puts, but I pass. And then a huge, right at the open today, someone destroyed the March 230s. I wasn't going to pay 230 for the con. I think there were $3 on the 230s. Now those are 4 by 490. So one of these days is going to bounce. So I'll probably pass on that one. Trying to think of some of the other names I'm looking at. I keep looking for Visa and MasterCard. Again, Visa too. I had the 240, the 340s. Why don't I have it up here? It started a week for the hedge I had a Tuesday morning, and those are like $1.40 now, $1.50, and I got those and I sold some out for $1, and I closed some out as it bounced. So tough to hold puts, even if you have the right direction. Tough on that one. Other names. So Lemonade, it looks like it's going to close under its 50-day moving average. Kind of disappointing there, down 7%. But if market finds some footing, certainly could be a name that starts to squeeze. I think that's it. I'm trying to think of some of the other names here, but to me, again, it doesn't make sense to be overly aggressive, because if the market does pick a direction and you're in either calls or puts, those are they're gonna pay, right? So the worst case scenario tomorrow will be a flat session, right? We close flat here today, and then tomorrow's just trade in a tight range and the market does nothing. Then that won't be good for weekly strikes. And that's it, folks. Let's have a great afternoon. I'll be back. Rock and roll.